Today I'm here with James Thomson, Elite Rated Manager of the Rathbone Global Opportunities Fund. James, tell our audience a little bit about your fund and your investment style.
I've been managing the Rathbone Global Opportunities Fund for more than 10 years now, and the style and philosophy of the fund have stayed the same. I'm looking for growth-oriented companies. I'm looking for undiscovered, under-the-radar, or out-of-favor growth companies. So I'm looking for companies that are typically not in every other fund manager's portfolio. And I'm also looking for businesses that are doing something a little bit different. They're shaking up their industry and growing very quickly. It's a concentrated list of investments, between 40 and 60 holdings in the fund, and I'm given free rein to go anywhere in the world, any size company in any sector of the market.
Oh. Now I know, but you choose to invest in developed markets and not directly into emerging markets. Tell me a little bit about why that is that you choose to do that.
I choose not to invest in emerging markets because I don't think I have the expertise to do it. I'll hold my hands up, and I think investing directly in emerging markets, whether it's in Mumbai or Shanghai or Sao Paulo, requires a higher level of expertise than I have, frankly. And so I think you need to stick to your knitting. You need to stick to what you're good at. And for me, I prefer investing in companies that are listed in developed markets. So you're talking primarily about the US, Europe, UK, and a few more developed Asian markets.
Yeah, and of course, if you wish to have emerging market exposure, you can very easily do that via companies listed in the developed markets.
Absolutely right. Many companies that are listed in the UK or the US have a significant part of their operations in emerging markets. And that's fine, because they do have the expertise investing their businesses and their operations in emerging markets, and so I will leave it to the people who do it the best.
Historically, you've had a big weighting in medium-sized companies. Is that still the case, and do you still see value in those sorts of areas?
Yes, I mean, sort of medium-sized companies, mid-cap companies, as we call them, is my heartland of investing. More than 30% of the fund is invested in mid-cap companies. I think it's an interesting area to invest because it avoids the very early stage companies that potentially could fail. And it also avoids the largest companies, which are really at the top of their growth curve. I think if you look at mid-caps, they tend to be the fastest growing businesses that have the best risk-reward prospects, but you still have to do the analysis on each individual company.
Your US weighting has increased dramatically in the last 2 years. Tell me a little bit about why that's happened.
My starting point for making investments is looking at individual companies, their operations, and how they do business. But these companies don't exist in a vacuum. They have to operate within these economies. And so I think it's important as a fund manager to take a view on the economic prospects from different parts of the world. And I can't help noticing that, in my view, the US economy looks on a very sustainable footing. The recovery looks well in place. And so that is a very good place to do business. And so as a result, my US weighting has gone from about 35% of the fund to more than 60% of the fund in the past 2 years.
James, thank you very much.
Thank you, Jerry.